Continuing our discussion on Chapter 7, this time, we are still in income tax. And what we will be working on this time is, let's understand the maths behind the computation of a person's income tax. All right. So in our case, in our scenario here, this is the tax rates that we are going to be using for the word problems. So let's say, for example, we have a person, a single person, whose taxable income is $90,000. Let's have that as an example, okay? So how do we use this table? So we need to find the taxable income according to the person's status. So this is a single person with $90,000 taxable income. So 90,000 is between this area here. So we are going to be using 28% as the tax rate for a person with $90,000 income, taxable income. Now, what does that mean? We do not apply the whole 28% to the taxable income. What we do is we apply 10% to the first 8,700, 15% to this next group of salary, 25% to this to the difference of this salary, and then 28% is only applied to the difference of the taxable income and the lower limit, which is 85,651. Okay, so to visualize the computation of the income tax, first things first is we create a number line. Okay, so we represent in the number line the first marker, salary. So 8,700. It is tax. It's 10% is applicable to that first amount. Okay. Now, when from 8,700 to 35,350, it is subject to 15% for the income tax. The next group from 35,350 to 85,650 is taxable for 25%, and then the taxable income, the difference between this, so from 85 up to the taxable income, that amount is subject to 28% income tax. So how do we find the income tax in total of this person with a taxable income of 90,000? So we find the difference between the markers and then multiply it by the percent. So for example, this one, 8,700 minus 0, multiply to 10%. That's going to be $870. The second marker, the difference between 35,350 and 8,700 is 26,650. Multiply it to 15%. It's 39.97 and 50 cents. Okay. The next marker, 85,650 minus 35,350, subject to 25% income tax. That's 12,575. And then the last group, 90,000 minus 85,650, we subject it to 28% income tax, and that's going to be 1218. So all these percentages here, we add them all, and that's the income tax to be paid for. So for somebody with a 90,000 taxable income, their income tax is about 18,660 and 50 cents. So in all the problems for income tax, this is the one that's a little bit tedious. But like I said, as long as you start with your number line, okay, and then use the markers for the higher limit of each salary percent, okay, of each tax rate, okay, and then you just find the difference and then multiply the percents and then add all of those total. And that is the income tax. All right. So let's use the example, the first example that we have, the man with a taxable income of 43,795. Okay. So it's our first example earlier. So 43,000 is in this group here. So we are looking at the 25% tax rate. So again, we got to make the number line. So we use 8,735,350. These are these amounts, 8,700, 35,350. These are the numbers that we will use in the markers. Now, you got to remember that the taxable income is always the last marker in there. So we find the differences and then multiply by the corresponding percent. Okay? So 35,350 and 8,700 multiplied by 15%. And then 43,795 minus 35,350 multiplied by 25%. So adding all of these amounts, the income tax of a person with 43,795 taxable income is going to be 6,978 and 75 cents. All right. So looking at our next example, the other person, the woman with no dependents, her taxable income is 42, I believe it's 42,100. Yes, it is 42,100. Again, 42,100 is in the 25% rate. So we create our number line, our markers, 42,100 as the last marker. Find the differences, multiply by 10%, by 15%, and by 25%. Okay? So here, this person's taxable income is 6,555. But if you would remember from the problem, this person has a tax credit of $500. So how does that work? This person needs to pay a total of 6,555 to the IRS, but $500 could be taken out because that's a credit. So the person will actually simply has to pay $6,055 to the IRS for her taxable income of 42,100. So just remember that whenever in the problem it was mentioned that the person will have a tax credit, that tax credit will be deducted from the income tax computed after all this, once you have the taxable income and the percentages applied to it. All right, thank you.